Good morning, everybody. Well, I guess to make it short, after last week, the only thing we need to think about is to buy the dip and where. It was a powerful reversal. The internals into market relationships confirmed it. And now we see how far it's going to go and how to get on board if you're not on board. Things are relatively quiet here. Not moving, as everybody is probably wondering, you're going to get a whipsaw again, or we're never going to know until we know. So until proven otherwise, buying pullbacks to support with the appropriate patterns and so on is the bias, and then we'll see what happens. Upside target, looking at spiders, obviously should be obvious, is the 200 MA and this prior pivot, since there's a void. Even this little not drop, but consolidation right there was overcome. So there's really nothing to stop it. Now, scrolling this back here to get a little bit more of a detailed view, see, there's just nothing. And that isn't that far away, right? So, look, with a pattern like this, you would think, right? Think isn't facts, but think that it could get beyond that. But that is going to be a stopping point. That pivot high, 4,100, the 200 MA. And in addition, we'll get to the Dow, but that is short-term extended, and that isn't likely to keep moving higher at the pace that it was. So, I think the beginning of the week could be difficult, just as far as consolidating last week's gain. I wouldn't be surprised to see some type of what could feel in the moment or seem in the moment to be an ugly drop. But look, just based on, what happened last week, the gap up, clearing of pivots, a wide range bar, it was actually followed through on Friday, to a lesser degree. But that is positive. And so looking for it to reach its next destination. Internals, this sentiment hasn't reached a bearish extreme yet. Breadth is there, but we need both of them in alignment. That's not there. So we look at that as being okay. There's, based on internals, there are, not to that extreme, and there is room to get there. And just because this is at an extreme, it could move higher if the markets move higher. And if we get, this continues to chop around down here today, this could dip down, and look, it might take a few days, a week, whatever. There's more news, economic news coming out during the week. But, so, the long and the short of it is, look to buy pullbacks towards some support, which could be like 3,900. What was resistance becomes support, and so on. Well, McGraw, I've been doing this a long time, as you know, and I hear what you're saying. Put call ratio is misleading because of, you're saying, a fair amount of puts that are being sold. And you could always look deeper into certain pieces of information that's utilized. And I'm not saying it's not valid. What I'm saying is that you got to stick to the historical information that you utilize. And so while this, I had mentioned in prior videos, it's interesting, and in this week's video, I said it's interesting that option traders aren't participating more aggressively on this move up. And I mentioned, that is actually a positive, because there's this hesitation or disbelief that it could follow through, or you could say, fair amount of puts that are being sold. So whatever the hedge is, there's just a view that this market can't go higher. And so we don't know that it can go higher until we see that it can actually go higher. Right. So over here, it was getting ready to break. There was the Fed news, and then there was the sell setup right there. And if it wasn't for the CPI number, it would have been reasonable to take that sell setup or bearish positions. But there was the big news item. And so the news item was a surprise. And then you got the gap up. And so I was just looking at the charts. It's got room to go up. Sentiment has room to get to an extreme. And just based on decades of information, when it gets there with sentiment and we get a pattern, we know there's going to be risk for longs. So we'll see how it unfolds. Weekly has a nice big green bar up. Same story. We always do about half of that range. It can dip down, but we want to see the candle bodies stay in the top, ideally in the upper third. And you see where I moved the green line, below here. It shouldn't even get down there, right? If there was some scary intraday move, what we'd want to see is buyers step up there and form a bottoming tail bar, right? We're not getting any big gap down. And, if it was, we'd look for it to turn back around and get a continuation pattern. So that's what we look for with situations like this, some kind of consolidation, some type of a continuation pattern, and then, different intermarket relationships, which we'll take a look at the dollar and so on, and potential where that might go, and which could lead to a reversal, and of course a reversal in the markets. So we always look at the futures. I look at where this is, and then top of that range, no big deal. I don't really, unless you're willing, I think maybe to do a condor on SPX, it's relatively close to the strike. So kind of not within my comfort level, because, anything could move, even though things are what we could say is short-term extended in the moment. And you can see that monster giant bar on the S&Ps, and then the stall, and just today is doing nothing. We've got this consolidation here, and we've got a little reference point of support, little support down there, brings us back, give or take 3,900, pullbacks into those areas. And what we don't want to see is it come into here, because over here, first of all, the depth of retracement would be getting a little bit too far, where institutions and traders would be questioning the power of this move. And that is, what I call the weakest link, meaning you've got these wide range bars and these monster moves, which are power. There's an extreme amount of demand overcoming supply, and it just overtakes it. And now there's nothing here. So that power move, well, if it's so powerful, it should create support, right? Make pivots, buying whatever little minor pivots are there, staying up in this range, and so on. So you want to see buyers step up and create support, right? Because there's nothing underneath. There's very little underneath. So the demand should be aggressive enough and powerful enough to make consolidations at the top. I had written down, I wanted, so if the market should dip, I would say below 3,900, right? So I got exactly what you've written, 38.95. So if a dip happens early on, and, just based on what the premium is, I wrote down 40.50. So pretty much looking at the same, or idea, same thing you are. But as you can see, going to SPX, that's really, is not too far away. So it would be surprising to see it move up a third day in a row. So it's reasonable to think that it would not get there, which is, the top of this area here. So, that's really a personal choice as to, doing something that is based on normal moves. Could it hit that? Yeah. I don't know what would kick in, but since things are a little extended there, but it's certainly under normal day-to-day conditions to be within striking distance. Maybe not so much when you consider it moved from 3,800 up to this area here. And so to get down below 3,900, it just shouldn't do that. And so looking for any kind of dips that might happen, You could probably get a bit more premium than what is there right now below 3,900. And at least, there's a little pivot right there. Not a pivot, but a bottoming tail bar. So intraday, a smaller time frame, there's going to be some pivots and some support. And as you can see, down here, 39, let's call it 39.50, whatever. There's a pretty nice support level, right there as far as on the 5-minute goes. And you can see the pivot on the 15-minute. And ideally, any dips down to that would be your reference point where, hey, if it just dived down there at the open, you'd look to see some kind of price action like this to be a buyer. All right. Qs, at least they got through the pivot. They underperformed, but very nice move. They're stalled here. Same story, buy the dip, stay in the upper half of the bar, create support, got much more room to go up. So tech should bring up the rear. NASDAQ stocks, institutional favorites, they should outperform. And, there were some other positives, in the advisory letter, I showed how percentage of stocks over the 200-day moving average broke out. So this basing and this power move, there's some positive things. So the things that haven't moved should be the ones that outperform. Dow has already moved up, to its reference point. He'll probably fall asleep during the conference, McGraw. McGraw saying Biden and China have a press conference today. What's he going to say? Ask them for what? Anyway, so look, 100% retracement up here at resistance, the Dow. This is going to underperform. What has underperformed, technology should outperform, but there's a little backing and filling to do. Russell, kind of messy, but look, everything moved. Upside in the short term is limited. Everybody knows Bitcoin got decimated, and it just looks like it's got to go lower. And that is the fly in the ointment as far as how does that affect the broader markets and equities. If this is diving down toward 12, 11,000, that's going to have some effect. I mean, on this day, and before anybody knew what was happening, I mentioned in the green room, something's going on because the markets were holding up pretty well that day, doing well. And all of a sudden I saw Bitcoin diving. I didn't know what was going on. I said, something's up here, and we knew later on what happened. But, this is something to be aware of. Set an alert and know if this thing starts diving again. And with that, the dollar that broke down, right? We talked about this, right, all this time about this consolidation. And if it was to break lower, that would be a positive for the markets. What might affect gold and silver? Well, this is affecting gold and silver. Right now, if you're saying today's pop back up, yeah, I mean, gold and silver moved up aggressively. As this moved down, that's the intermarket relationship. And so, yeah, if this is up as it is, gold and silver is going to consolidate today or pull back, possibly significantly. So we'll see. Now, the downside, there's major support down here. So traveling all the way down here, right? If it continues to drop, and we say it's not happening today, but getting down here is something you should be aware of, because if it does, 101, look to the left. And it falling sharply, that's power, which could mean it gets through it. But in the short term, getting down there is going to be buyers, and that's going to create headwinds for the market. So you should have an alert down there. You don't have to be watching it, but you should know. And silver, it's actually holding up pretty well. But short term extended, did clear resistance. And gold's holding up pretty well. All right, so buyers aren't running away from it. Oil is just marking time here. You know, prices went back under, right? This was a wide range bar. Prices went back under, hit the support, they're holding. And it's just in a little trading range. Set an alert at the top, an alert down here. We'll see which way it goes. And there's our transports. Short-term extended 200s up there. So as you can see, 200 MA upside target. See what happens when they get there. Spiders 200 MA. Dow is already there. NDX has a much larger distance before it can get there. So a greater potential for upside. And interest rates. No backing off of the 13-week. Why should it? And it's been leading the Fed, what it's doing, and it's saying, hey, you know what? While there's this hesitancy based on the recent news, everybody thinks, okay, so maybe they won't do 3/4, they'll do a half. Okay. Well, they're not going to be cutting interest rates anytime soon, so why should this back off? Everybody knows, markets were closed. The bond market was closed on Friday. Interest rates up a little bit, but a wide range igniting bar. Same story. Right? It doesn't matter what we trade. Same story. Stay in the lower third if it rolls back over. So that base, it's back above the base. So for day traders, keep an eye on this. If it starts moving up, well, some pressure on the market. Dollar, that breaks out, starts moving up, interest rates moving up. Odds are some downside pressure on the market. Doesn't mean it's going to negate what happened last week. 5-year, moving up a little, 10-year, but stopped at the 50, green line 50 MA. Maybe it can get down here to 3.6. If the 10-year should get down here and we see the dollar coming down to major support and the S&P is at its 200-day moving average, and if we should see sentiment up into these red bands here, we have a lot of things coming together that say risks for longs have increased dramatically. And I think that's the intermediate term plan, for this week and maybe into next week. So bias of there should be buyers on dips until risk increases based on market internals into market analysis, and we'll see how it all unfolds. All yours, Dan.
Good morning. So I am happy we're not gapping up. I mean, that's the worst scenario, 2 big bars and then gapping up 200 points. It would just make it harder to get on board. So I'm liking this, and I hope we go sideways 2-3 days to give us a chance to get on board. Now, do you remember I said 2 or 3 or 4 times last week during this bullish run? I said, obviously looks higher, no question about it. I'm fully bullish. And then people were saying, well, what's going to make it pull back? And I said, well, earnings and some Fed governor coming out and saying, you all are overreacting. And that's exactly what happened. One guy came out and said exactly that we're still raising rates and you all are overreacting. He said it's 100% of what I was concerned about. But that's good because that's given us the pullback here. All right, so we have a lot of long ideas and put spread ideas in the letters. But yeah, pullbacks are going to be better. Oh, Trump here on DWAC, gapping over this bar. This was a put spread idea, sloppy, but it's a good put spread idea under last week's low. Bitcoin here got shellacked last week. Oh wow, it was up earlier. Look at that, and it just took a little dive here just in the last half hour. But you know that guy, the FXC, what a horrible story that is. His you know, he's in the camp with Madoff in my eyes. That's like I just feel so bad for anybody being the victim of crime. Yeah, Thomas. Yeah, the Yanktree was Friday. 30-minute high was beautiful. I think Alex was part of that. Let's see. I saw this thing gapping down. Did I lose my pre-market? Sure did. I don't. TradeStation always does this for me. I don't know why. All right, Perta here. It's clawing its way back a little bit, but 30-minute low. This is a short idea, day trade short. For VCSA, it's not a good swing because it's so far from the 20, but it's a beautiful bearish 15-minute chart. I'm personally not crazy about shorting stocks under $5, but if it's a day trade, I guess it's fine. Same, it's a dollar stock, but looks lower. At least that one's a wide range bar from multi-week consolidation. That looks horrible. Looks like that could be on its path to zero. Same with this. Yep, they're all weak there for absolutely. All right, somebody gave me a couple stocks here to look at, and yeah, they're all fine. This one top of the range. I like the breakout on the weekly though. SVM, I'd like it to go sideways another day or two to prove that it can hold up here, but that looks good. Oscar Bravo, bottoming pattern also, let it go sideways another day or so. IRT, that's a nice 1, 2, 3. Sure. I like that. Let me set an alarm. I'll just put it in a window. IRT. And I just, we sent out the chart of the week this morning and it was on 1, 2, 3s. And I have included a chart in there about the microscope of the 15-minute chart and why we like these. It's a nice high range end of day base. Intel, yeah, over yesterday's high. I like it. It got a double downgrade on Friday and still closed very bullish. We talked about it Friday morning, remember? It was a little bear sandwich here. So that was a trade over 30-minute high on Friday. Oh, this Tyson was the only earnings trade I did on Friday. And I do these rarely. What's called a short strangle, which shorted the out of the money, I think $73 calls away the 72 or 73, and then the $60 puts. And it's gapping up less than $1 here. So we should have a beautiful open profit. That's exactly how these things work. We're making a bet that they're going to stay range bound. And when you get hurt is when they have a monster gap against you. All right, HCA, it's a bullish weekly. This was a problem. So many charts on Friday that we have bullish weeklies. See, that's a bear sandwich, 1, 2, 3 breakout, but it's at resistance on the daily. So it needs to go sideways. But yeah, it looks higher. This is bullish consolidation, red bar ignored. Sure, that looks higher. DVAX, I mentioned this. I sent a Telegram alert on the wide range bar. I said it looks great, but it's a bio. But now it's chopped around for 5 more days. So that makes the pattern even stronger. Stop under the red bar. You could buy the high if you don't mind. Bios, yeah, looks great. BTF, why am I looking at you? Oh, I know why. I noticed this is a Bitcoin ETF that's actually optionable. So I'm going to keep it in my permanent list, but follows Bitcoin. And wow, look at this volume. Look at that, all-time lows. This thing is damaged goods. AMC had the Disney movie out over the weekend, 160 million. So I'm assuming that's helping it out. But bottoming pattern, maybe. Yeah, when I saw the Qs being weaker today, I noticed Microsoft was the weakest, and it's selling off right now, actually, even more so. So this is the ugliest FANG right now. Recent IPO, ATA, gapping up here. I'll keep an eye on it. ASTS, nice wide range igniting breakout. Gapping up to 1030, though, is the problem. So the gap's too big. I've been watching Baidu and Baba here for a couple weeks now, ever since this retest. Now it's gapping over the highs. Baba is the cousin. Yeah, we can watch them both. Baidu's a tad better. Berman, $86, no pattern. 685. It's a gap breakout, but gap's too big. It's $7 is major resistance, so no interest. SI, $37. Big gap. Hey, it's a nice pullback pre-market. That could possibly set up a day trade long. That's not bad. Tyson. Oh, that's a short strangle. Bib gapping up, $11. That's a gap breakout. It could be a put spread. Hasbro, I don't know if it was earnings or just a downgrade. That would be quite a punishment for just a downgrade, but that's ugly. That's an ugly gap. MMP alarm. Let's wait for pullback to around 52.80. Yeah, I read about Mobley in the Barron's was talking about, the Intel, and it was an Intel spinoff or something or other. I know, or I wish I got into this on Thursday. I was on my list, and I think it moved too quick or whatever. Hey, marijuana. All right, this GOEV. GOEV into this gap fill is okay. Actually, hold off, I'm gonna watch it. It's coming in a tad hard right here, so I got it in the bottom right here, so let's hold off. EGHT, I said to buy a pullback. So that looks okay. Or Tyson, where's Tyson at? 18 cents, Tyson. So let me try 15. No, fill at 15. Now it's 20. All right, let's cover Tyson somewhere 18 to 20.